Look, when you're making market updates, you're not just competing for attention. You are racing against the clock. Every single second you waste, you lose a viewer. So today, we're going to break down the exact formula for creating those sharp, fast updates that traders absolutely need to watch. Ready? Let's get into it.
All right, first things first, the first 3 seconds, they are everything. I'm talking no hello guys, no long boring intros. You have to deliver immediate value and a sense of urgency right from the very first frame. Your one and only job is to make a trader stop scrolling instantly.
A hook like this one here. A big move could happen in the market tomorrow. Bam! It grabs their attention right away. See, it's not just a statement. It's a direct signal to their profit and loss. It basically screams, hey, what I'm about to say is critical, and that creates a powerful reason for them to keep listening.
And this all leads to the golden rule. In the world of trading, efficiency is king. You have to cut the fluff. Your audience doesn't have time for pleasantries. They need actionable information, and they need it now. So just get straight to the point, every single time.
Okay, next up, you've got to tell the market's story. Raw numbers are totally useless without context. Your job is to connect the dots and build a narrative that's crystal clear. So let's break down today's data, and I'll show you exactly how it's done.
So the headline number, the Sensex dropped over 750 points. Ouch. After 3 straight days of gains, that winning streak came to a very sharp halt. That's the first piece of our story today.
And of course, the Nifty followed right behind, falling nearly 200 points to close below that really key psychological level of 24,400. So we know what happened. The big question now is, why?
You know, the key is to break down the complexity. This fall wasn't random. It was driven by 4 key things. First, you had profit taking after a strong rally. Makes sense. Second, geopolitical tensions are making people nervous. Third, we got some weak cues from the global markets. And finally, those stubbornly high crude oil prices are squeezing company profits. Simple, clear, and direct.
But hold on, here's the twist in the story. While all the big indices were bleeding, the broader market actually showed some strength. Mid-caps and small caps, they closed in the green. Now this is a huge signal. It tells us that even on a down day, smart money was out there finding opportunities. There's always buying interest if you know where to look.
Now for what is maybe the most important part of any market update, the levels. This right here is your core value. These are the numbers that are going to dictate a trader's entire strategy for tomorrow.
So here they are. For Nifty, the immediate floor, what we call support, is at 24,315. If it breaks through that, the next safety net is down at 24,253. Now on the upside, it's got to cross 24,478 to really get its momentum back. For Bank Nifty, the key levels are 56,938 on the downside and 57,374 on the upside. This is the map traders will be using tomorrow.
And what was the big money doing? Well, both foreign and domestic institutions were net sellers today. Foreign institutions, or FIIs, they sold over 2,000 crore worth of stock. Meanwhile, the domestic institutions, or DIIs, also sold over 1,000 crore. This just adds another layer to our story, showing that the selling pressure was really coming from the big players.
Okay, no market is an island. So to get the full picture, we have to zoom out and see what clues the rest of the world is giving us. This global context is absolutely critical for setting up tomorrow's trade.
So here's the key question. As our markets were closing in the red, what was the feeling on the other side of the world? Was this selling pressure a global thing, or was it, more localized to us?
And here's your answer. The US markets bounced back hard. The S&P 500 and the Dow were both up around 1%, and that was driven by positive earnings reports and some good news on the US-Iran front. This difference, this divergence, is a critical piece of the puzzle for tomorrow's strategy.
So we have the data, we have the context, and we have the levels. The final, and I'd say most important step, is to put all of this together into a clear, actionable game plan for your viewers. This is where you deliver the real value.
In your language, it has to be sharp. Drop the jargon. So instead of some robotic phrase like, technical indicators suggest a potential consolidation phase, a sharp trader is direct. They'd say, the market will decide its direction now. Hold your positions, but with a strict stop loss at 24,077. See? That's clear, it's concise, and you can actually act on it.
So here is the game plan. 1. The overall trend is still positive, so for now, hold your long positions. 2. Protect your capital. Use a strict daily closing stop loss of 24,077. 3. The market is stuck in a range, so avoid overtrading.
Just wait for a decisive move. And 4. Expect things to be choppy. Volatility is likely to remain high, so manage your risk accordingly.
And that brings us to the final piece of this whole puzzle. You've delivered immense value, but how do you make sure your audience actually comes back tomorrow? Well, you do it with a strong, engaging call to action.
Now here's the crucial point. Your final instruction isn't for the market, it's for your viewers. This is all about engagement. Don't just say like and subscribe. You have to turn passive viewers into an active community. Make them think, make them debate, and make them come back for more.
So, the final trade is yours to make. Based on everything we've just seen, the weakness here at home, the rebound in the US, and those key levels, what's your call for tomorrow? Let me know in the comments below. Are you bullish or are you bearish?